Hi there, welcome to Wyckoff technical analysis session for Polygon. Sorry, I have to clear my throat a little bit. So here, previously we talked about Polygon still within uptrend. That's last week, and this week the good news is it's still within the same trend. However, it got rejected by the orange key level of 20 cents this week. And then let's get into both the weekly and daily charts and see what stage what Polygon is at in terms of Wyckoff, plus is there any breakout opportunity within this trend. So if you're new to my sessions, these are the key takeaways that you can expect. Basically the current and potential next Wyckoff stages, the key price levels that the price would find support or resistance, plus any breakout timing. So first, we look at the weekly chart. That's the bigger picture. Currently, we are at a middle or late stage of Wyckoff accumulation. Currently, the price is going through, or the cycle that we're at is at a test stage. Basically, is subsequent stage after selling climax and secondary test. So, what we can expect next would be either one of these cases. So assuming that the price will continue within this uptrend, this blue box over here. So there is a chance for the price to eventually bounce from the bottom of the box and eventually test first the center line and eventually show us another sign of strength, meaning it will challenge both this center line, this dashed line over here, plus the 28 cents key level. So I might have drawn this line too high because what we had here, the sign of strength, was rejected by this yellow key level. So the wicks went towards the ceiling of this uptrend. However, the closing prices were below this 28 cents. So this bounce may lead us to somewhere around this same yellow key level. However, if it successfully accumulates or basically go through the backup and last point of support period, then that may be the location where the bouncing towards the upside happens, and that's when we get into, or Polygon gets into the new distribution cycle. So you may notice this chart is a bit shorter because the one that I used to use in previous sessions, they just discontinued the matic and fully converted to the Polygon, the POL call sign, not the matic anymore. So we lost all the history. So these tags and all these key levels have withdrawn. So if they look a little bit different to you, that's the reason. So just quickly check the Bollinger Band and Kerner squeeze. I shared before that I consider Polygon has gone into a squeeze situation since mid-July. So that's week of July 14th. That's when it started. So that means from that point onwards, it's trading pretty much in a narrow range, and the squeeze pressure is being built up. So when it eventually got released, the pressure got released, we've got bigger swings of price. Unfortunately, this chart doesn't have the history, but we'll eventually see it when that happens. So remember, the pressure is building up. It's just a matter of time for bigger swings to come, but with the current backdrop of the uncertainty around the world, it's kind of hard to predict where the swing would head first, whether it's going to head downwards first before it heads up, or is it going to head up and then eventually go down pretty quickly. Just prepare that it's going to come. And then for the timing of breakout, if the price continues to trade within this narrow range, it's pointing to somewhere near mid-January. So let me enlarge this. when we get to the daily chart, it will be clearer. Currently, it's pointing towards January 19th. There's still 3 months from now till that time, so it's a long period, and it's pretty difficult for a price to trade within this narrow range for 3 months. So I guess it's going to bounce back into the uptrend unless another event like what happened last Friday happened. Then that brings it to close outside of the box. Then that means the bottom edge of the box will then become the resistance for Polygon's price. As of now, let's assume that it's going to continue within the box. So that's why I'm not adding the percentages previously, but now let's say give it higher confidence towards this side. Well, I should put 55 because it's really a lot of uncertainty is hovering around. This test, I'm putting it below the red key level. There were a lot of historical references previously under the Matic chart, but then now we lost all those history, so I just want to tell you why I put it here, because back then there were some references, but then even the selling climax was testing this red key level of around 15 cents. So that's why the test is here. So some people may say, oh, what happened on Friday have triggered the test already. While that may be true, there's still a chance for the price to really, or the candlestick to really come down to close below this blue line and closer to the red key level. So that's why I'm still giving it a 45% chance, but the hope here is for the price to bounce from the bottom edge and go test the yellow key level at least. So let me bring this back down. Because of this wicks over here, I always put this way too high, and also because of the ceiling is at that point. So if all those tariffs, whatnot, maybe walls and other stuff are all clarified and settled in dust, then obviously this can go higher, but for now it should be somewhere, at least we hope it should be testing this yellow key level. Okay, let's go to the daily chart. Here we've seen the spring that's a lower point than the selling climax and even the second test during an accumulation cycle in Wyckoff methodology. So now what to expect, right? That I would say was a failed attempt, because it was supposed, you can say failed attempt or like trap. So it seems like it's building up a platform period to shoot the price up, but then it only shot up to the point where the ceiling of this upward trend box was, and then it got rejected even before the Friday event. So it's not something, the price, the downtrend wasn't something triggered by what happened on Friday, but it happened much earlier than that. So that's why I say, would that be a bull trap? So people, I mean the big guys know, we look at charts, they know the methods we know, and they know some methods we don't know as well. So they're building up these periods, and that's where it traps people, because people are expecting the price to go up. It did go up for a few days, and then eventually it died down before like way before the tariff announcement. So it's like 15 days, 2 weeks before that, the price has already been 2-3 weeks before that, the price has already been dropping. So okay, going back to this point, the reason why I shared while we were in the weekly chart that the price wouldn't like trade within here is because what we see here. on Monday and Tuesday, the price basically went and closed above the orange key level of around 20 cents. So let's enlarge this a little. Even this red candle closed above that key level. So that's an indication that the tendency to go challenge at least the center line, like what happened back in the beginning of this month, just about a week ago, happened. So that's can be the first step, and then that's the second step to challenge the yellow. So hopefully this leg going up wouldn't get much resistance until those two lines, the dashed line and the yellow key level. Obviously we want to see some challenge towards the ceiling of this upward trend as well. That was what happened back in beginning of September, end of August, when the price climbed till that level. So you can see that's another sign of strength, even though I put in like a failed bull trap, just not to make it too busy. Okay, so final check on Bollinger Band corner squeeze. So that's what happened, right? We had a squeeze back in August, somewhere around started around late August, and then the squeeze pressure got released starting September, and then we've got these bigger swings. Irrespective of what happened on Friday, there was still bigger swings compared to this compressed period. Okay, so currently there's no squeeze because the purple lines are just deviating from the orange, so we can take a breath for a short period of time, because in daily chart, as soon as it does something like this, the squeeze will happen again. So if I turn it on, here you see it's got a little bit of horizontal period, and then the swing comes, and then another horizontal period, and then bigger swings come, much like what we had over here as well. So time over time this will happen. So let's see whether I have missed anything. The time point, you may ask, is still very far down the line, somewhere near like 19th or 20th January. That's why I said only when the price trades within this triangle we'll look at that date. But then if it already bounced out, then that's not relevant. But then there may be another time point further down the line, but it's too early to tell. That's like half a year further down the timeline. So let's not confuse each other, and just focus on this picture that we hope for upside to a sign of strength, while there's still risk for the price to get to really close near the red key level of 15 cents. So thanks for joining me for Polygon session today.